Okay. Okay. Sorry about that. Testing. If you can hear me and if you can see my charts, please do type Y. Hope you guys are all well. Welcome. Been an interesting week so far, despite the fact we thought it might be relatively quiet. We've certainly had our fair share of market activity, and really we have the dishonesty of the car industry to thank for that. The fallout of Volkswagen is still nothing more than phenomenal. Shares well over 30% down yesterday. And it was interesting, I was speaking to my wife about it actually on Monday when they were only 20% down, and we were saying, wow, that's actually just about, I've just been filled out of that DAX trade. It's huge. So DAX new highs there, as I was talking about this morning. We were talking about Volkswagen and saying, hold on a minute, my screen, is my screen doing something funny there in the new room? Everyone okay? Okay, probably because I was just moving that chart slightly. So I just got out of the DAX trade. Let me put my orders and positions on here because I've managed to sort of get out of this scot-free. This is me trading badly. I very often show you when I trade well. I do also show you when I trade badly, but this is definitely an example of my weakness as a trader. Okay, just for your interest, let me share it. So looking at the DAX, I saw we had real momentum here in the DAX. We obviously had this gap earlier on, and I wanted to get long. I wanted to get long the DAX to trade then the fill of this gap and the extension back to yesterday's resistance levels. So the theory there was quite easy to understand, right? Following momentum, looking for a push above that previous high to go and fill the gap. This is sort of technical trading 101, really. And I was right. I did manage to get long, and I did manage to take that trade off at the top of the gap. But look what happened in the meantime. What's going on here? Well, I'm too early on the move. I'm trying to preempt the move far too early, and so I'm getting long, getting stopped out, getting long, getting stopped out, getting long, getting stopped out, getting long, getting stopped out. Well over €1,000 down, very quickly before then making that all back when finally the market does go. And this was really poor trading, so poor discipline by me earlier on. Thankfully, been able to get out of jail free as it did break, but then there's a real kind of test of character and a test of perseverance in order to be on it when it does go. So here we go. There's an example of an activist trader when we get it done. When we trade badly, when we believe a move is going to happen, and the move did happen, but we're on that move too early. Speaking of which, actually, if anyone is interested, a classic long here at 95.98 might be, if I wasn't giving the briefing, I could be interested in that. Anyway, moving on. So I hope you found that interesting. Let's have a look at yesterday overall. I mean, it's hard to pin down one reason alone why we had the equity market sell-off, but certainly the automobile industry was a big factor on that move lower in risk assets yesterday. Also, though, and Deutsche Bank's Reed points this out, and I find this quite interesting, also, though, were the mixed messages coming from the Fed. It doesn't, and Piers spoke about this to you guys in some depth on Monday, it really doesn't seem like they know what they're doing. And the FT has a really good article here about how the Fed must stop dithering and must finally decide to take action. Let me see if I can share that with you in the room. And it's kind of like the worst thing they can do is do nothing. Does that make sense? The worst thing they can do is do nothing and then disagree on how they're going to end up doing nothing. So we expected September to be the first rate hike since June 2016. And now they're talking about here how the whole globe has sort of readjusted itself for the Fed to have weak monetary policy. And if that's not the case, then when the Fed do move, the shock to the financial system is going to be immense. And this goes against everything that a central bank should be. A central bank should be providing stability. Okay, central bank should be providing price stability, stable inflation. But all we have to do is look back here at the Swiss franc to show you what happens when a central bank changes their monetary policy, when they're forced to change aggressively and the market's not expecting it. You get this kind of colossal sharp move in valuation. And should the Fed be forced to do the same? Because now, what is it? Less than 20% people are predicting a rate hike for October. Is it 20% October or 20% the rest of the year? Anyway, it's low. You know, the rate hike expectations for this year are very low. If the Fed, however, do feel like they're forced to hike, then my goodness, you really want to be trading that day, because that would be a huge adjustment in these asset price valuations. Look at T-notes. They've been incredibly volatile. T-notes normally, you know, have a very slow ranging day. But if you look at T-notes since Yellen's activity on Thursday, we've gone, well, let's have a look if I bring my currency tool. You know, we've surged by over 1%. We've then fallen by 0.5%. We've surged by 1% again. T-notes should not be this volatile. But the reason why they are this volatile is because of the mixed messages coming from the FOMC. And if one of the world's most, if you like, stable assets is acting in this volatile way, then really it's not necessarily good news for other assets out there. Did anyone get the DAX Classic long that I mentioned? That would have worked an absolute treat. If I wasn't giving the briefing, I would have been all over that. As I said, you did, Lolita. Well done. Yeah, so really nice technical trade here. We broke through the high. We came back to test the previous level of support. Bang, there's the support. Paul, excellent. I'm glad you got hold of that. Now, this might be all right for an exit. This is where I exited my last long 9620, but it depends. You've got the pivot level as the ultimate target, I'm sure, 97.35. So really good activity here in the markets for us day traders. The way it's working from a technical point of view, if you are able to read momentum, good times ahead. Let's have a look at today then, going forward. Just one thing that I missed yesterday. I was away from my desk, so I didn't get hold of it. I do wish I got that DAX Classic. That would have been... I'm glad you got it, Paul. I'll give you my bank account details and we can sort it out. The gold market yesterday had quite a sharp correction here. Here you can see my trades in gold. These are my live trades in gold. The first one then on Monday, just a scratch long and then a scratch, and then just lost a couple of ticks yesterday on gold as the pivot didn't hold. But volatility here in gold, you know, huge volatility in gold, huge volatility in T-notes, as these markets that are reactive to monetary policy and the dollar are trying to price in the conflicting messages coming through from the Fed. Talking about central bankers, today's main event, do not miss it, 2 p.m, ECB's Draghi speech. So this is a biannual speech that Mario Draghi does and it's away from a rate announcement, but it's so he can further communicate his policy to the whole European bloc, and that's being flagged as the most important meeting today. What can he talk about? Well, it's all about whether and when we get European QE2. You heard how dovish Yellen was on Thursday. You heard how much she concentrated on the fact that you've got global slowdown in economic growth, that China, and the fact we had that, I haven't even mentioned it yet, but the Chinese manufacturing data out overnight, Chinese manufacturing fell at the fastest pace for more than 6 years. In this environment of slowing global growth, we saw how dovish Yellen was on Thursday. If Draghi follows the same suit, which he may well be inclined to do, then expect some kind of confirmation on not necessarily the date, but certainly the willingness for a further round of quantitative easing out of the Eurozone. And you all know what to do with the Euro if that happens, don't you? Is that, Paul, you're sharing your DAX trade there? Can't actually see your trade on the ladder. Oh, is that just the green line to the red line? Green line long, red line out of the profit. Well done. Well, that was a nice classic, and it was there available for you all to take. You know, you've got to take these opportunities, and if you're not going to take it on the DAX, go for the Euro Stoxx correlated asset. And you know, this goes on. I was talking to a couple of traders yesterday. I was seeing struggle in the markets. Yeah, I think there's been great opportunity these last couple of days, but you have to be in at the right time. Yesterday afternoon, towards the end of the afternoon, from 3 o'clock to 5 o'clock, you had some fantastic opportunity, great activity when markets are actually moving. However, from midday to 3 o'clock, there was very little going on. So you need to know when to, or at least be disciplined enough if nothing's going on, or if there's very little opportunity as you see it, stay out. But if there's real momentum and real volatility that you feel like you can get hold of something, then get in. And that DAX opportunity was a fantastic example. And wow, still going on the DAX, the momentum after that break. So excellent entry. Anyway, 2 o'clock then, Mario Draghi, guys. I want all eyes on that, please. We've got mortgage applications coming out before that from the US, of course. We've had relatively positive data out of the Eurozone already. Well, a slight miss there on German PMI. Just a slight miss. But I think these European equities are pricing in now some dove love from Mario Draghi. That's what I think's going on, because the fundamental data has been appalling. But look at these Euro stocks filling the gap, and the DAX just continuing to fire on. So expect 2 o'clock dovish sounds out of Draghi. The Euro might continue to come under pressure. If you're getting European equities act like this on an expectation of some dovish commentary coming out of Draghi, have a look at the Euro. You might find you get a decent break there of yesterday's low. I'll certainly be looking at that. If you add your pivot points to the Euro, what have we got here? Okay, so we found resistance there exactly at the pivot level. Don't know if anyone got hold of that. I certainly didn't squawk it. But if we do break through that low, then we might have S1 on the table for the euro dollar on expectation of further dovishness out of Mario Draghi. So this is the picture, guys. More slowdown of global growth, bad manufacturing data out of China, more moves out of risk assets, including the S&P, Nasdaq, DAX, Euro Stoxx. You saw a continued move out of equities yesterday. I expect that really to be the overall theme. However, what can Mario Draghi do at 2 o'clock to help perhaps give us that bit of confidence that more money is better? I'm going to send out a couple of more research articles though from the FT, which really is interesting, talking about how the behavior of markets has changed in terms of if more QE or looser rates are to be announced, will that actually create a different reaction in equity markets to one that we have become accustomed to over the last 7 years. And you first saw this with Yellen on Thursday, of course. Just for you guys to let you know, I've just ordered this book. The FT have this as their book of 2015. This is the shortlist business book of the year from the FT, and this comes in pretty much at number 1. The making of behavioral economics. I'm not surprised this is so popular. This is, this is my subject, a subject that I absolutely love. I kind of wish that I'd got in on this act and I would have very much liked to have talked about it. But I've just ordered that book. Delivery comes next week. It'll be in the Amplify office, so if you are in house, feel free to borrow it. If you have not ordered it, if you're looking for something good to read, Dara, I know you were looking for something good to read before, so you might as well, you might want to check this out. Okay, guys, that's it from me. All the best, and I'll see you in the room.